Started with this, and so looks like we are live now. So just want to welcome everyone to the stream this evening. Tonight we have on Piere from PK Investing. He has a YouTube channel where he talks about his investments. We can get it more in depth into that throughout the stream, but just want to open it up to you, Piere, to introduce yourself, and we'll go from there.
Yeah, how's it going, everybody? I'm Pierre from PK Investing. I like finance, cooking, and long walks on the beach, and I'm hoping to have a really good time tonight.
All right, yeah. So I guess we can just start a little bit with how you got into investing and kind of where you learned about investing or what got you motivated to, put some time and effort into it.
Yeah, so it all started way before, well, not way before COVID, but maybe 2018, I think. And at the time, I had really started becoming financially aware of not only my finances, but the finances of everybody around me. And I remember looking at my bank statements and my savings account, and my interest rate was nothing. It was 0.01%. I was getting, pennies on the pennies. And it was so depressing. And I realized there has to be more to this than just putting my money in a bank. And inflation is a thing too. So I was losing out on inflation, and it was just a bad time. And so I decided, let me see what I can do. And the only alternative other than investing was opening up a business, and that was just too much work. And I was just a 21-year-old boy with a dream and no money to start a business with. So I figured let me start learning about investing my money.
So, like, what kind of resources were you looking at originally, I guess, when you were?
Really, it was all just the internet and YouTube. I remember at the time, Andre Jick, he was a pretty big influencer when it came to dividend investing. Um, and at the time, Robinhood was really starting to
Yeah.
pick up speed. Oh, Robinhood, no commission investing. They were the only one that did that at the time. And, it was just revolutionary. And I remember making my account with Robinhood and depositing just $100 and being like, well, I guess I'm never going to see this 100 again. That's it. I didn't really believe in it too much. Um,
Okay.
and I remember buying Ford Motor Company. That was that was something. Everybody always buys Ford for their first stock because it's dirt cheap, you know. But it was an interesting time.
Yeah, I remember. I think I put $200 into Robinhood when I started, and I put the money in, and then I was like, what am I gonna do with this now? And I really didn't have a plan after that. And then I would have like buy like one share of like something that was like $10, and
Right.
then it would go up like 5 cents, and I would be like, oh yeah, let's go, we're doing great here.
Yeah,
And
it's
then
it's really
yeah,
interesting, like, when you
so
see someone who's starting out and they have, like, $100 invested, and to them, like, if it goes up to $101, like, they think that they've made it. Like, that's investing, they won, they beat investing or whatever.
yeah,
And then
exactly.
you see people that, they have multi-million dollar portfolios and they're losing and gaining tens of thousands of dollars every day. They're like, whatever.
Yeah. Um, I think, having a starting point is certainly valuable. Like everyone has to start somewhere for sure. And, you know, you build over time. So, what are your goals when it comes to investing? Do you have any specific goals? Did you have any goals when you started? And how has that sort of changed over time?
Yeah, so when I first started, my goal was just to not lose my money to inflation. I wanted
Okay.
to be able to leave a lump of cash somewhere and basically have it at the very, very, very minimum, just retain its buying power and not lose out to inflation. And then I realized that I could go a little bit further. Why not, instead of just wanting to break even with inflation, why not actually tried to make a profit off of it. And then you go down the rabbit hole and you start seeing, oh, well, some of these people can live off of their dividends indefinitely. And so then I started looking, okay, maybe I should take this investing in a different direction. And instead of just trying to preserve my capital, maybe I'll try to grow it.
Yeah, I think that's a pretty powerful idea in general. Like, I think, at least from my perspective, a lot of people almost go at it the opposite way and, see investing initially as this like get rich quick type thing,
Mhm.
like when they're new to it, or just as a way to like get rich or make money. And, um, but it's interesting to hear you kind of came at it from a different angle. Do you have any like specific goals now, I guess, in terms of like specific numbers, or are you just
Yeah,
continuing on
sort
your
of.
path as best you can?
So like um initially I had about maybe like 20 or 25 good stocks that I had. And then in the past year I realized that that felt really excessive. And so I'm in the process now of selling out of most of those companies and just consolidating into like half a dozen stocks. Um, and once that's done, I think I'm just going to try to do my best to get to $100,000. That's what Charlie Munger said. That's what I'm going to go for. Trying to get to 100K, and then we'll go from there.
Okay. Yeah, that's awesome. Uh, what is your kind of thought process on reducing the number of stocks? Because I hear a lot of different opinions about that. I guess for me, um, around 20 or 30 is like seems like a decent amount. That definitely doesn't seem like too many to me. Um, like 50, that kind of seems like too many to me. But like, I don't know, six or 10 seems like too little to me. So I guess, what is your thought process with that?
So I I completely get the argument for diversity, which is why most people like having 20 to 30 stocks. Um, but my, I guess, philosophy or my reasoning is that if you really know how a company moves and how it operates and just how it goes forth and how it does business, it's pretty easy to get comfortable with that company. And once you really get comfortable with it, um, it becomes easier to put more, or I guess, put a larger percent of your portfolio into that one company. Obviously, J&J is my bread and butter, and like I would 100% go into J&J if I could just dump everything, put it all in J&J. But I'm not that against diversification, Um, so it's to me, it's about finding just a small handful of companies that you really know and you really understand and just going with that handful. Just kind of ignore all the noise. You might have better opportunities elsewhere, but as long as you know what you're doing, then even with little to no diversification, you can still do really well.
Yeah, that makes sense. So I guess would you, if you get to this point where you have like a certain number of companies that you're happy with, would you, just kind of stop looking at other companies and not worry about other opportunities in the future? Or would you try to like, um, I guess keep keep looking at least a little bit, and if you see a good opportunity, maybe take it, if that makes sense.
Yes, I really did think about that when I decided to dump a lot of my stocks. And I came to the conclusion that, with my really small portfolio size, it's okay to not be so diverse because, I'm only investing like 10K in one stock, which I know 10K to some people is a lot of money. But I feel like if a really good opportunity presented itself, like, for example, just a couple weeks ago, Goldman Sachs, I was looking at Goldman Sachs and they were down. I can't remember. It was a large percentage over a certain time period. And they had just announced a 25% dividend increase coming up, and the price was down, the dividend growth was high, and so I put, I think it was maybe $3,000 of just extra money into Goldman Sachs. So I'm not against taking advantage of certain opportunities, but my main focus is just going to be my core portfolio. That's not to say that if a really good opportunity presents itself, I might ignore it, I might not ignore it. It really depends on what it is and how I feel about the company, really.
Okay, yeah, that makes sense. I guess going, if you want to talk more about the Goldman Sachs thing, is that like you see that opportunity and you put some money into it, and is your thought process there of it being like a, shorter term position, or are you kind of in that for the long term now?
It really depends. So I obviously Goldman Sachs is a pretty big company. They're pretty successful. You can make a lot of money with them. But I think just for right now, I might only be in it for 6 months to a year just to see how things are. Um, I know already it's really starting to head back up. So if someone bought at the bottom, or I guess the relative bottom, then they would be getting out pretty well. Although it's a pretty good company, I wouldn't be opposed to adding it to my core in like a year or two if everything goes well. But again, we'll see.
Okay, yeah, I think that makes sense. Like having a pretty well defined strategy, but still having some like um, room for variation. I guess that definitely makes sense. So how do you go about like choosing, I guess, when to invest or what stocks to invest in at what point in time? Do you kind of try to look at some sort of valuation or like specific price, or for these core holdings, are you just kind of buying them consistently regardless of the price?
Yeah, so I have a an Excel sheet that I use to calculate discounted cash flow, and that's my main go-to when I look at something if I want to invest in it or not. And right now, what I've been doing is every week or so, I'll take any leftover money after bills are paid, groceries are bought, etc., and I will invest all of that money just at one time every couple weeks. And usually it's whichever stock is the most well valued according to that Excel spreadsheet.
Okay, yeah, that makes sense. So you just kind of have a, um, I think that's good. That you have like a specific, I guess, schedule
Hmm.
to invest, because then you're, being consistent with it, which is kind of one of the things that I wouldn't say I struggle with, but is something I want to do a better job of. Is like I, contribute money every month, the same amount to my account, but I don't necessarily invest it like the same amount. And some of that just depends on like, what opportunities I see. And sometimes there's just stocks that I want to own more of, but it just never seems like it's a good opportunity. So maybe I should try to implement some sort of like regular investment. I guess I kind of have that. Basically, um, I look at all the stocks in my portfolio, and if there's anything I haven't made a purchase of in over a year, then I'll, buy more of that. But um, ideally, I would really like to do that like on a more frequent basis than a year, if that makes sense. But I don't
Yeah,
know.
like dollar cost averaging, right?
Yeah, I guess sort of, but like I want to, be strategic about it, and,
Hmm.
not buy, buy at what I think is a good price. But then at the same time, I guess an example would be J&J. Like actually it was down like 2% today, but it's been down a little bit over the past few weeks, I think. But in general, that's just seemed like not really too great of a price for me um, over the past probably 6 months or a year. But that's like a great company at the same time that I, want to own more of and want to be a good portion of my portfolio. So um, sometimes it's a maybe a little bit of like a mental thing for me, but I don't know. I don't know if that made sense, but
Yeah, yeah, it makes
that's
sense.
kind of
Like
what I'm
you
thinking.
want to invest in a company that's high quality, but at the same time, you want to get the most bang for your buck when you invest your money.
Yeah.
So
Yeah.
it's a game of balance, really.
Yeah, and I've especially like I guess the last 6 months in 2022, like it seems apparent to me that the high quality companies, you know, for one, they aren't dropping as much, but they just some of them almost have like a premium valuation. It seems just because of their, um, I guess like track record and reliability as a company. Um, that sort of makes them even more valuable. Um, on top of like the actual financial like revenues and incomes and cash flows that they're producing. So
Yeah, yeah, they've got the blue chip premium price, and I call it the blue chip tax. You have to pay the blue chip tax to invest in the blue chip companies.
yeah, that makes sense. I think that's a good way of putting it, but I don't know. I would like it worded differently because I don't like paying taxes. So you gotta make it seem like something that's an incentive per se, or
Oh, the
something
incentive fee,
positive.
the blue chip
Okay,
incentive fee. There you go.
okay, that sounds good. So I guess if you want to share a little bit about like where you're at in life and how you're funding your investments right now. I know before the stream you said you're still in school. So how does that kind of fit into your financial picture and your ability to invest at this point?
Yeah, so I'm fortunate enough that most of my schooling has been paid for through scholarships, which leaves a lot of money left over for other things like investing. And I do also work. I started working right after high school, and I've been working all the way through university. And it doesn't leave a lot of extra money left over to invest, but I still like to, I don't intentionally set aside money to invest, which, come to think of it, I really should. It's the smart thing to do. Pay yourself first. But I think that where I am at currently in life, I don't have too many responsibilities. So I'm trying to build a really good foundation outside of investing financially. That way, once I have that foundation built, I can dedicate all the extra money to investing.
Yeah, that definitely makes sense. I guess I would sort of say I'm in a bit of a similar situation, just kind of definitely not contributing like a whole lot right now, but I can see in a few years like I'll definitely, at least I'm hoping and I think I'll be able to contribute a lot more. Um, but obviously, I'm sure my expenses will go up as well, which
Oh,
is
yeah. Yep.
something that I guess is a challenge. You gotta work towards that. But yeah. Um, so, do you have any sort of ballparks about like what kind of percentages of your income are going towards investing at this point? If you don't want to share that, that's fine too. But just
I think about
for
it for a second. I think
reference.
maybe like maybe about 20-25% roughly.
Yeah, that's
I
probably
do
pretty
a pretty
good,
good job, yeah.
honestly, for being in college and stuff like that. So, yeah, that's cool. What was I going to ask you? Oh, so um, do you just kind of have your investments in dividend stocks, or do you have other investments outside of that in any way?
Right now it's purely dividend paying stocks. I do technically
Okay.
have a uh what is it called? Roth 401k with my job.
Okay.
And I contribute enough to meet the company match. And I think it goes in some target date fund, which I really don't believe in, but I really want to get that company match. So it's that balancing game again. Um,
Yeah.
I like how they send me the reports every quarter about how the account is doing, and every single quarter I've beaten that account myself by more than double. So either they're doing something wrong or I'm doing something right. I'm not sure what it is, but I'm only doing it for the company match at this point. It's free money.
Yeah.
Um, but with my own personal, hands-on investing at this point, I've basically dumped everything except for individual dividend stocks. I know
Okay.
QYLD was a pretty big thing for me a while back, but that's all gone now.
Yeah. Do you want to talk about that for a little bit? I guess, what is your thought? What are your thoughts on that QILD
Um,
or like income funds in
yeah,
particular?
yeah. I mean, they're pretty good for what they do. Like, if you need income and you have just a boatload of money, put it in QYLD or JEPI or something similar, and just take the monthly income payment. But also know that your investment itself is not going to go anywhere. Best case scenario, it'll stay flat, and you'll just keep collecting that income. But like QYLD, it's bounded obviously in that range, but you still don't want to see it not do anything for 20, 25 years, especially someone my age. I mean, I'd understand if I was a 65-year-old retiree who had a couple $100,000 in the bank and just wanted to invest his money somewhere where he'll be able to get a monthly income. But for someone like me who's 25 years old, I've got my whole life ahead of me, and I don't want to just have my money just sit in QYLD for the next 45, 50 years and give me a couple hundred every month while my initial investment is starting to slowly decrease.
Yeah. I was definitely a little bit like skeptical initially, like when I heard about QLD and similar things. I don't know. To me, it just like seemed too good to be true, and I
Oh
guess
yeah.
the like downside is just the fact that you're not gaining any capital or appreciating your capital at all. I think there are some like funds, like again, I don't know a ton about it, but I actually did look into them a little bit for my parents. But I don't know, there's some that are a little bit more balanced, and offer some growth. So I think, they can be a good um, opportunity. But again, like for someone in their 20s, I don't think it's, the best option for sure. But again, it's like it's if you don't want to like put a ton of time into investing, like maybe that's not the worst, you know, place to put your money. Um, you could do some sort of other broad market index fund, but I mean that could be a decent choice as well if you want to be pretty passive with it. So um, yeah,
Yeah, I know with QYLD, the biggest criticism I'd get about my videos is that um I guess people wouldn't realize how much downside there actually was relative to investing in something else. And the whole point of QYLD is just a vehicle for income. That's all it really is. As long as you're okay with that vehicle like deteriorating over time, sure. But I know with myself, the only reason I put so much money into QYLD is because I wasn't really sure what direction I wanted my portfolio to go in. So like I said, I had those 2025 stocks, and for a year, I really didn't know what I wanted to do with them. I bought them because they were all blue chips, and I really liked the companies. I used all of their products. Their dividends were fine. But once I realized that I wanted to consolidate, QYLD lost its purpose for me. Because the whole point of QYLD for me was just to use it as a temporary placeholder. And once I realized what I wanted to do with all that money, QYLD was just like it did what it did, and it had a purpose and it fulfilled that purpose, and it was just time for me to move on.
yeah, I think that definitely makes sense as like a, I guess, shorter term just place for your money to go, in order while you're figuring things out. That definitely makes sense, I think. Um, so you don't own any stocks that don't pay dividends, you said, right?
Yeah, no. No, I used to be big on Tesla. That was my only non-dividend paying stock. And it was the
Okay.
reason why I started making YouTube videos all about Tesla. Um, but it's really volatile, and yeah, it's exciting. Sure, there's a lot of news about Elon Musk always, but I figured I would much rather own Johnson & Johnson and Procter & Gamble, for example, rather than Tesla.
Are you there?
Oh, yep, I'm here.
Oh, sorry. I thought you were like still talking. No, okay. Sorry. I think it just like cut out for a second and I thought you stopped. Okay. You're good though. But yeah, that definitely makes sense. What are you I guess I guess what my thought is like I think there's a lot of great companies that don't pay dividends and you can make a lot of money with them even if they aren't like I don't know, like some of the more speculative companies like a company like Amazon or Google, right? Is um I guess arguably a great company, and I think most people would agree on that, and they're growing very quickly. What is your, I guess, reasoning against not wanting to invest in companies like that? Is it just kind of you want to focus on what you're focusing on and just not worry about other stuff?
Yeah, so the way I've always viewed a dividend is it's kind of like the health monitor of a company. If the dividend is growing and the company can afford to pay the dividend and grow the dividend, then obviously that company is going to be in a really good place. And then on top of that, the dividend is completely removed from the share price, completely separate from the share price. And so I'm looking at it as another, I guess, safety measure for my portfolio because obviously nobody ever wants to sell a company or sell for profit if they don't have to. And I'm the type of person who never wants to withdraw any of my initial investment from my portfolio. So if I invest in a company like Amazon or Google or Berkshire, they're all great companies. I really enjoy reading about them and watching other people invest in them. But if I do invest in them and I make a lot of money, then I have to sell pieces of my investment. I have to sell ownership in that company in order to put money in my pocket. Whereas, say, Microsoft or Apple, even, they're also technically growth companies, but they pay a little dividend. So I'm still getting income from them while retaining my ownership in the company. And that's really important to me, ownership.
Yeah, that makes sense. I I mean, to me, like the whole dividend strategy, makes a lot of sense, but also I see there's just like a lot of other opportunities. But I think it's good to have like kind of a focus that's defined, and so you're able to just focus on that and not really stray away from it, I guess.
Yeah.
But yeah, I think that makes sense.
Not bashing, growth investors or anything. Great people, great way to invest, but for me it's all about ownership. Like I want to own pieces of this company. And yeah, I mean everybody wants to make money, but for me, I want to own the company while also making money, if that makes sense.
Yeah. So I guess what so if you invested in a company like Amazon or Google and you made a lot of money, then you would like sell it and then you could invest in something else with that money, right? So
Yeah, but then I would no longer be I wouldn't own any Amazon. If that makes sense. So like
yeah,
the whole point of me wanting to invest in a company, I'm driven by ownership in that company. And
okay.
with no dividend being paid, the only way for me to actually put money in my pocket and profit off of the investment is by reducing my ownership in the company.
So I guess what does ownership in the company get you? Or what is the attraction to that to
It
you
just makes
of
me feel
that?
really good.
Okay.
I
I
mean,
mean, if that's
maybe
all it
one
is,
day
that's
I'll
perfectly
own
fine.
enough J&J to like sit on their board or something, but who knows? You
Yeah,
can
I
brag
mean,
to people, be like, "Yeah, I own 0.0004% of Microsoft."
Yeah. Yeah. If that, yeah, that makes sense, I think. And, um, I don't know if I've said this before, maybe I have, but I think it's like, it really doesn't matter that much how you invest or, what your specific strategy is. Like, as long as it makes sense to you and you're comfortable with it and it's, something that can do well as an investment over time, then it really doesn't matter that much. Um, so
Yeah, like
that's
really,
cool.
as long as you're making money and you're actually investing and participating, any strategy works. You just have
Are
to,
you there?
yeah,
Oh, sorry.
you just have to really find something that you're passionate about. And, everybody's passionate about different styles of investing. But as long as you find something you're passionate about and you stay consistent with your investing and you actually make a profit, then you can't really go wrong.
Yeah, for sure. I think some people get caught up in like almost trying to prove that their like strategy is like better than someone
Hmm.
else's or that they have the answer or something like that. And um, yeah, I think as long as what you're doing is working for you, then more power to you, really. Um, so yeah, let's talk about your YouTube channel a little bit. So I know you made a lot. You made some videos about QLD, and those did very well.
Yeah.
Um, so what was your kind of impetus for making those videos? I guess just because you were investing in it.
Yeah, because I was investing in it and it's what got the most clicks, really.
Okay.
Um, like I put out a Tesla video and I really like Tesla, but I put out a Tesla video and nobody would watch it. And then I'd put a QILD video being like, hey, look, QILD, 10% yield. And then it'd get a couple thousand views, within X amount of days. And then it, it's a little demoralizing when you see that the video that you're passionate about not really get any views, they don't get any engagement, but then you make just a video about an income paying ETF and everybody flocks to it. Like you upload it and you have a couple hundred views within the hour. It's but what I used QILD for the videos at least was to draw people to my channel in the hopes that some of them, maybe just a small amount of them, would stay for the other stuff.
Yeah. Yeah. So do you have any sort of plans for the channel moving forward? I know you've been a little bit sparse on the videos, but that's fine. I mean, I'm
Yeah,
sure you're busy.
it's hard, making time for YouTube because I'm a full-time student and then when I'm not in school, I'm at work. And then doing all of that, you still need to make time to spend with your family and people close to you. And then when you do all of that, then you're like, okay, time to work on a YouTube video. And people that don't do YouTube don't realize how much like actual effort it takes to produce even a mediocre level video. Like
Yeah.
you have to, I don't know, some people just turn on a camera and they record a video. But if you're like me and you don't record anything, you need to prepare what you're going to say, find a good topic, actually, find a good flow for the video and the topic, record the audio, and then somehow find enough stock footage online to keep people engaged. Because obviously, I some people don't have cameras or they just have do voiceovers, and you need to keep these people engaged with stock footage and audio, which is a lot harder to do. And so all of that takes so much time. Then you have to actually edit the video, which editing video takes a lot of um, it takes a lot of, I guess, learning. It's a learning curve, really,
Yeah.
because the way something works in your head, you like put it in a video and you're like, this is awful. Like, no one's going to want to watch this. And so you have to kind of put yourself in the shoes, or I guess in the viewing seat of your audience and be like, well, what do they like to watch? What would engage them? And so you have to edit your video in that style, and that obviously takes time. And that's not including the time to render and export and upload and all the technical stuff. And I remember, like during my prime, it would take me a full day, like from about noon to 8 p.m. from start to finish to make a full video. And I would be exhausted after doing that just in one shot. And so, like, even right now, 2 weeks ago, I recorded audio for my next video. That was 2 weeks ago, and I still haven't finished editing it. Just to give you like a rough timeline. It's hard.
Yeah, I think when you're busy like that, it's definitely tough. And I mean, everyone's busy, really. Um, uh, so it's not like some people have more time or not. It's just a matter of, I guess, how much time you're able to put towards that. And yeah, like you said, it is challenging, and you have to, learn the editing stuff. And some of that stuff is just super tedious, and
Mhm.
um, like you're trying to figure out how to do something that you might be able to visualize what it looks like or describe it, but to figure out how to put that into the video is tough. And some of the editing softwares just have like so many like buttons and drop downs and everything that I don't know, it's just confusing sometimes.
There are so many steps. Like before I did YouTube, I mean, I knew obviously that it took a lot of work, but I never would have imagined just the sheer amount of steps that had to be taken from the very beginning until the video finally gets published. And that's another reason too why I started doing QILD, because you do all that work and you'd put out a video and you'd get like 20 views after like a week. But then you kind of lose your passion for it. It's like, yeah, I'm making something that I enjoy and I'm putting it out into the world. And obviously you're not supposed to be so affected by how other people react to your content, what you create. But when you have the option to create something that people want to consume versus something people don't really want to consume, and you're going to put the same amount of effort into both of those, you're going to go with the one that people want to consume. So,
Yeah. Yeah, it's definitely something that like is, I guess, hard for me, is figuring out what to make videos about, and um, trying to talk about stuff I'm interested in. And sometimes what happens is I'll get all these ideas for stuff, and it's just like just kind of all over the place. And um, I think it works to kind of have like at least when you're a smaller channel, to have like kind of a focus for your channel. Generally a pretty specific focus, I guess, so that the people you get are pretty interested in that. Um,
yeah, yeah, for sure. Like I'd much rather have a very small handful of concentrated viewers that really like what I'm doing and really appreciate what I'm doing than put out a video that's just going to get a lot of kind of noise, but then they don't really care about it deeply. It's just they're only there because everybody else is. That's just my opinion on it. It's a grind. It really is a grind.
yeah. Well, yeah,
Just
it's
gotta
definitely,
keep grinding.
yeah, you just gotta be consistent, and
Oh
not
yeah.
even consistent, but just like don't stop.
Just
That's what
don't
I've
do what
tried
I'm
to
doing.
do so
Don't
far.
take, 2 months off between videos.
Yeah, I mean, I'm sure it'll be fine, but
Oh yeah. Yeah, I just need to I've been thinking about maybe dedicating like a good 30 minutes to an hour, like if not every night, then at least 3 or 4 nights a week, just so I can sit down and focus on my YouTube channel, focus on my internet, presence, and just kind of stay around basically, just so I don't kind of fade into obscurity.
yeah, that makes sense. So do you want to talk about your college, I guess? Like what are you studying?
Yeah, so I'm a chemistry major, just pure
Okay.
chemistry. And right now I have one more semester to go and I'll graduate in December, hopefully, with a
Okay.
bachelor's in chemistry. And then after that I'll see where life takes me. I'm sure I'll have to get a job in my field, obviously. Um, I I'm not sure if um, I'd rather work in like in the industrial side of chemistry versus working for government or versus working in a research lab. But as long as I can do something with chemistry, I'll be pretty content.
Okay. What's interesting to you about chemistry? Because I would be interested to hear that.
It's so it all started with I think I was in 10th grade and that was the first chemistry class I ever took. But before that, my dad was a chemistry teacher and he's from Lebanon, so he was a chemistry teacher in Lebanon before he moved here. And while other kids are, reading books about colors and shapes and stuff, he had this old chemistry textbook that he would give me, and uh, he turned memorizing elements into a game. And he would, if you ever like table salt, for example, he'd be like, "So this table salt is sodium chloride, which is a sodium ion and a chloride ion, or a chlorine atom or a chloride ion, and different things just around the house." He'd be like, "This is this element, this is that element," and then basic compounds like salt and water. And once I got to 10th grade chemistry, I already had that really base foundation, which gave me a head start against everybody else. And then the more I started learning about chemistry, the more I gained an appreciation for just how the world works and how everything is just atoms and electrons, and nothing really touches anything else because electrons don't touch, and just things like that. All these kind of quirky little facts. And then I thought about it and I realized that this is something that I could see myself doing for the rest of my life. And so I kept taking more chemistry classes, and when college came around, I majored in chemistry, and here I am, almost there, just a little bit more, and it's been a very, very interesting and tiring adventure, I should say.
Yeah. Well, it's good you only have a semester left, and
But I'm not
sure
taking any
that'll.
chemistry classes, ironically. Those are all done. I'm taking pure electives.
That sounds fun.
I'm taking one class about um, it's like the study of ancient Egypt. And I'm a chemistry major and I'm learning about ancient Egypt. That's what college is for. That's where my money's going. Ancient Egypt.
Yep.
Like
Gotta have
oh
some. Gotta broaden your horizons here.
my horizons are broadened enough and my wallet is broadened even further.
Yeah, exactly. That's what they really want. Um, let's see. What else do we not cover? Oh. So you don't have any ETFs. You don't have any bonds.
No, I think I had a CD in my name at one point, and I until like last year I didn't know what CD even stood for. Um, but I had one, and it wasn't much. It was like only a couple $100. But I think other than that, all of my, I guess, finances have been purely checking and savings. No bonds, nothing like that. The only ETF that I've ever held was QYLD. And even with my job, I guess technically the 401k that I have is in a target date fund, but I don't even count that because I can't control it. So at the
Yeah.
first chance I get, that money is going into something else as soon as I can. but I have to get a new job first and roll it over and all that good stuff. But yeah, basically just stocks and stocks and stocks.
Yeah, that's cool. I think I think it's good that you're like so focused. I have like, the dividend stocks and I have index funds and different stuff, and sometimes it's, I don't know, it just pulls me in different directions, it seems. And
Yeah, it feels like you're spread too thin sometimes. That's how I felt when I thought about
yeah.
trying to diversify. I felt like I was just spreading myself way too thin. And I'm sure you've heard of the term min-maxing in video games.
What term?
Min-maxing, min-max, like when you
No, not really.
it's pretty common in like RPGs and stuff. Like when you have
Oh, okay.
a specific like character and you have a bunch of skills to choose from, you only focus or you only put all of your like experience points into one or two or three skills just to maximize those skills, just so you're really proficient in those skills, and you kind of ignore everything else. So you're kind of weak everywhere except for those really con- uh, concentrated areas. But in those specific areas, you're like incredibly advanced. And that's how I kind of look at investing. I kind of ignore all the noise, ignore all the different avenues of investing, just focus on the one thing that I know really well and that I really enjoy.
So I guess where or how did you like get to that point? Because um, for me, I feel like a little bit of the reason I'm, I guess maybe spread out is the term you use, which is certainly not a bad way to describe it. The reason I'm kind of doing that is, to figure out what works for me and, test out different things, I guess. So how did you get to that current strategy, I guess?
It was mainly just trial and error, really. I'd kind of just picture myself in a scenario like, how would I feel if I invested in a bond market index fund? And it was really, I would imagine that it would be really boring because there isn't really any research you can do into it. You can't familiarize yourself with it too much to a certain degree because it's the entire market, at that point you're just like googling market news for today, basically. And so at least with individual companies I noticed that they really excited me because I felt that I was involved in that company. And that's a feeling you don't really get when you invest in ETFs or bonds or CDs or whatever else is out there. And also uh, finding Gen X Dividend Investor and watching all of his videos and being there from the very beginning, like you can see how someone who's passionate about individual stocks is, and that really spoke to me. And so I felt that in addition to being excited about stocks, I could really use that excitement to direct myself and to channel it to be a productive investor and actually be successful.
Yeah, that makes sense. And I think I share some of the same sentiment. I guess I'll ask you this, and it's not, um, I guess it's not a question I would ask because I don't know the answer, but I just want to hear your take on it, I guess. What would you say to someone that like says there's no point in picking individual stocks because, you know, these professionals on Wall Street are, trying to do this and they can't even beat the market most of the time. So how are you going to do that?
Oh, that's a good question. Um, I think my answer would be just to take a look at all the people that have done really well. Um, Obviously, the most common answer to that is Warren Buffett. The guy who literally only invests in individual stocks and just obviously his advice to people is to invest in broad market index funds, but he himself doesn't do that because that's just his style. Like Coca-Cola is his bread and butter, and that's just one company. And so I feel like for 99% of people, maybe even myself included, investing in an index fund or anything like that is the, I guess, most reliable way to go. But if you look at those index funds, like look at the top 10 holdings in those funds, and those top 10 holdings are a majority of the fund. So at that point, you are paying a, what's the word, like an expense ratio, or is that the right word? Expense ratio?
Yeah,
Yeah, so
I
you're
think
paying
so.
an expense ratio for, I guess, maybe like the insurance of having the rest of the market in bundled in with those like top 10 stocks. So you might as well just buy the top 10 stocks and call it good, because the worst that can happen is the market crashes, but then when it crashes it recovers. So just buy the dip, really.
Yeah, I think that definitely makes sense. And that's something that like has, I guess, come to my attention within the past year and made me start to think a little bit. Is it like how much those biggest companies, kind of drive the performance of the indexes? And I think I forget what it's called, but there's which this sorry there's all which is also kind of why I've come to appreciate the Dow a little bit more recently, is because it's not really weighted by market cap at all. Um, you know, so it's not weighted by market cap. It's just kind of based on the price of the
Yeah.
companies, and it's kind of adjusted so they all kind of have equal weighting essentially, or something like that. Um, and there are index funds that are like unweighted. Like there's an unweighted S&P 500 index fund. I forget what it's called. A few people have mentioned it recently that I've heard about, but I think that's, I guess, an interesting alternative. But then again, like then if you're investing in like an unweighted S&P 500, then Apple is like such an awesome company. It's like a very small percentage of your portfolio at that point, So
Right.
it's almost like the opposite problem. But yeah, those are interesting discussions, I guess, to be had.
Yeah. Like I fully understand people that are arguing that you can't beat the market by picking individual stocks. But again, it kind of goes back to that point where you don't necessarily have to be at the top. You don't have to be number one. You can't win at investing. It's not like a game where there are points and there are goalies and whatever, but it's just find something that makes you passionate, and as long as it keeps you investing and it keeps you consistent and you are making a profit, even if that profit is mediocre compared to someone that invests in a broad market index fund, as long as you're doing all of those things, you're going to have a good time and you'll come out relatively on top, especially compared to people that don't invest anything.
Yeah, I think that's definitely like something to keep in mind as well, is like if you're investing, most likely you're like doing better than a lot of people already. So
Unless you're on
you
Wall
don't
Street
need,
bets.
yeah, you don't need to yeah, maybe you could do a little bit better if you like change something, or um, but you don't have to do like the absolute best, as long as you're doing pretty good. And oh, what was I gonna say? Oh, I lost it. That's all right. But yeah, yeah, I definitely agree with your sentiment though, that there's like a lot of um, opportunity and advantages picking individual stocks that are overlooked, and also like the the question of, well, the um, or why invest in individual stocks, like that could potentially just be a reason for you to go like invest with those fund managers and make them more money. So
Like
maybe that's just like propaganda. Who knows?
I don't need to, pay someone to tell me that Microsoft is a good buy. Like I already know
Yeah,
Microsoft is a good buy, and I don't need to pay
yeah,
someone to be like, here, I will invest your money into this index fund that's 30% Microsoft and Apple and Amazon, and then you pay me, 10% of your gains or whatever. Yeah, I'll open up my Fidelity app and I'll do it myself.
yeah, yeah. Well, is there anything else you want to talk about? Um, Anything else we
Um,
missed?
I think we got it.
All right. Well, trying to think of anything else, and yeah, I think I'm good. Definitely appreciate you taking the time to come on and have this discussion and share some of your thoughts about investing. I think it's definitely interesting. I think most people I talk to probably, have more than 10 holdings. So I think it's definitely, that's not like a bad thing or anything
Right,
or a
right.
good thing. I'm just saying it's interesting to hear your thoughts on that. And
Yeah, it's different.
hopefully, yeah, exactly. I think that's kind of the goal here is to just share some different thoughts and um, opinions on investing in general. So, oh, we got one question here from Ryan. When do you want to retire?
Last week. But no, I think so. I'm 25 right now, and in a perfect world, I would comfortably be able to retire by the age of 40, but obviously that's kind of shooting for the very like best case scenario because obviously, life will always throw expenses at you, both planned and unplanned. Like if you want to get married and have children, it's going to cost you a lot of money. And
Yeah,
unless you're doing really, really, really well in the stock market, those things, while I'm not saying that being married is a bad thing, I'm not saying that kids are a bad thing, but they do set you back financially. So like a single person can be like, I want to retire at 35, and they absolutely can if their job pays well enough and if they take really good care of their finances, sure. But for someone like me, like if I want to, I mean, and I do want to get married and have children, then 40 is very unrealistic. But I figure if I shoot for 40, then I'll at least position myself in a way such that I'll be able to retire relatively earlier than most people. Not exactly 40,
yeah,
but shoot, if I can retire by 50 or 55 very comfortably, that's great. As long as I can just do it before I'm 65 or 60 years old. I just want to have at least an extra 5 years to just enjoy my life.
yeah, yeah. I think that's a good goal, and I think that, yeah, like you said, there are a lot of expenses down the road, and I guess one of the things um, that, again, I don't want to use the word struggle, but one of the things that is, I guess, difficult for me at this point is just like being able to make any sort of like projections about like, hey, what is my income going to be? What are my expenses going to be to like figure out like something, right? Like at this point it's just like so hard to figure that out. And so
Yeah,
um
yeah, because
you kind of just gotta
we just don't
keep
know.
going a little bit. Yeah.
Yeah. Like, anyone can get a mediocre paying job, but obviously some people with their degrees, they can get better paying jobs than others, and that'll also change things. But then when that happens, you have to be careful because you'll start to inflate your own lifestyle and you'll start to, oh, I want a bigger house, I want more cars, I want a better, wardrobe. And you just got to be careful. Just be fiscally responsible and try to save all of your spending or as much as you can at least, and try to spend it where you have to spend it, like on children or on medical bills, groceries, mortgage, things like that.
Yeah. Definitely agree. Yeah, like you said, you just gotta have a focus on being financially responsible and just do the best you can. So yeah, I think that's all the time we have. And I just want to thank you again for coming on this evening. It was great talking to you and learning a little bit more about your investments. Definitely, everyone, go check out Pierre's YouTube channel. We'll definitely be anticipating the next video whenever you can get that uploaded. Definitely be looking forward
I'm
to that.
estimating maybe like January of 2024 right now. So make sure you hit that bell notification icon, people.
Yeah. All right. Well, do you have anything else you want to say before we end it?
Nothing really. Thanks for having me. I had a really good time, and it's always good to be able to explain your position and your investing strategies and your life goals and everything with everybody else. And yeah, just thanks for having me. Appreciated it.
All right. Thank you, Pierre. We'll see you all next time.
All right, take care.